Nifty Sensex in the red, but the Nifty Bank is up 100 points as we speak. It's holding up in the green, not by a whole lot, but there is that bit of outperformance on the narrative that perhaps bank FDs are going to get far more attractive as an investment opportunity for retail. This will help banks garner more deposits, which eventually they can lend and, make their money. So that seems to be the narrative behind the up move that we're seeing in banks. But Varun Goel is now with us from Nippon India AIF to talk about the way forward. Varun, 17,000 on the Nifty. Is this an attractive level? How do you feel about the markets at the current juncture? And if you have 100 rupees to invest right now, would you invest all of it or would you wait for lower levels? And where would you put that money?
Good afternoon, Rima. Thanks for having me on the show. I think we are trading at still a 5 to 10% premium to the historical 10-year average valuations of around 17 times. I think if you look at the Nifty EPS expectation of somewhere between 900 to 950 rupees for FY24, I think we are trading at closer to 18.5, 19 times. So can we correct another 5 to 10%? That is possible. However, in our view, this should be a great year to do bottom-up stock picking. I think, if you are building a long-term equity portfolio from a 3, 4, 5-year perspective, calendar year 23 seems to be a good year to put your money to work in a staggered manner. So I would think that, putting 25, 30% of investment today and then building the rest of the portfolio during the course of the year, should be a good strategy to build a long-term equity portfolio.
Okay, and where would you look to put this money then? Are there any specific sectors or pockets of the market which you think are, more attractive now post this recent correction that we have seen?
I think banks definitely appear to be extremely attractive from a valuations point of view. We have seen a decent correction. Earnings seem to be pretty robust. I think since 2013, FY23 is the first year with a 16-17% kind of credit growth. I think FY24 we should see some slowdown, but still we expect credit growth of 13%. I think with the recent changes in regulations, the deposit mobilization can get faster. I think asset qualities are still quite robust and valuations are still below the pre-COVID levels. So that is definitely one sector which looks attractive. I think select names on the capital goods side, especially stocks like defense, which have a huge order pipeline, also look attractive. Building material plays, wires and cables, agri pipes as a theme, we believe should also do well from a next 3 to 5 year point of view. I think mid-cap IT also selectively, while there are a lot of fears about a US recession, I think if we take a slightly longer term view, the growth should be pretty good since digitalization is going to be a slightly longer term trend. So these are some of the pockets which we believe one should buy into in the recent correction.
Okay, so banks, defense, wires and cables, agri pipes, and mid-cap IT, right?
That's right, yes.
Okay. Particularly, can you tell us the rationale for investing in agri pipes, near-term and long-term?
The last, I think, 2 years, because of the raw material prices being extremely high, the cost of pipes had become quite high. As the PVC prices have cooled off in the last 6 months, the pipes will become much more affordable. So a lot of customers, farmers were waiting for prices to come off before they start doing the capex, which is required. So I think this will turn out to be a good year since the prices are down 35% from the peak that we saw last year. Also, I think wires and cables is a segment. Since the residential real estate housing demand continues to be quite robust, this segment definitely benefits whenever there is an uptick in real estate cycle. So both the segments, in our view, should do quite well in the next some time.
All right, and Varun, just one final question: is there anything that that you feel you should get out of at this point? Essentially, anything where you feel like you're about to see a deep cut coming through?
Well, I think a lot of fraud has been cleaned away from the market in the last 18 months. The market was at 18,000 in October of 21, and we are still there or actually below that. So I think markets are fairly valued at this point of time. There are pockets of value which are emerging.
Varun, thank you very much for this conversation. Great to have you on the show. Out of time now on Trading Hour. Stay tuned. Halftime report is up next.